Hey there, it's Ben Walker here, founder of Inspire Life-Changing Accountants. Now, in this tax tip, I'm talking about updating your trust deed. So this is relevant for you if you've got a family trust or a discretionary trust, and it runs a business or receives investment income, something like that, and you use that to distribute to family members or entities in your family group. So now, with trust deeds, now that's the document we use to make sure someone can receive money or be a beneficiary of that trust. But it's also the document we need to rely on to allow accountants to be able to do things like trust distribution streaming, where we distribute different types of income to different beneficiaries. Now, to go into that a little bit more, sometimes your trust might receive interest income, it might receive business income or capital gains income that financial year, or even franked dividends. And sometimes it might get a better tax outcome to distribute certain income types to different beneficiaries. For instance, capital gains, if there's a discounted capital gains, individuals get a 50% discount on those and it carries through. But if you distribute discounted capital gains to a company, you don't get that 50% discount. So it can be a considerable difference there. And to be able to do that, we need an up-to-date trust deed. And there was a big case that went through the courts in 2010 and 11, and as a result, I think it was in 2012, Bamford was the name of that case. I remember that so clearly in my younger days as an accountant. And Bamford said your deed needs to be able to allow you to distribute those different types of income. And soon after that case was finished, all of the lawyers updated their deeds to allow that sort of thing. So what we're making sure there is that your deed, if you rely on that ability, that your deed is updated. And it's actually good practice to update them every few years anyway, to keep them current with current legislation and current precedents that lawyers do. But particularly that 2010, 2011, 12, if your trust is older than that, I'd recommend it definitely gets a review and potentially updated. But again, we want to be doing this with every 3 or 4 years, or just checking that it's up to date. So again, this tax tip is on keeping your trust deed up to date. And what you don't want to do is from a tax perspective, try to do something that your deed doesn't allow. That wouldn't be a great outcome. Thanks again, and I'll see you at the next one.